Welcome, everybody, to Wall Street Reporter's Discovery Day Company Spotlight, where we bring you those stocks which have that multi-bagger upside potential. Again, the things that we're looking for is companies going after massive market opportunities at a key inflection point with multiple catalysts in place. And one of the things I should add to that, which normally we don't have it, but it really helps, is when you have a company that's part of a hot theme, because a hot theme, a hot sector really helps to amplify stock price gains. And one theme that is heating up right now is uranium. That's right, uranium. Of course, rare earths also, which Appia Rare Earths and Uranium is part of. But Tom, welcome back to the program. And actually, you're part of two mega trends, but today we're going to be focusing on uranium, especially because uranium is making new highs. People are getting excited about uranium stocks, which is, for obvious reasons. I think by now everybody's figured out, with all the electric vehicles out there, with constant demand for energy, you have the developing, you have all these countries, India, everybody joining the developing world. The need for electricity, you can't meet it with the existing oil and gas, solar, wind. None of that is going to be enough. You're going to have to use uranium. And the crazy thing is, by now, all of a sudden, all the eco-friendly people have turned around. They've come around to uranium as being a very clean fuel source. So uranium is making new highs. Now, here's the crazy thing, Tom. The previous high in uranium was, I believe, 140, right?
142, yes. 142.
Okay. Now, I'm a chart guy. I don't know if you're a chart guy. By the way, speaking of charts, Appia Energy is breaking out. We'll talk about that later. The stock chart is very bullish. We broke out of the 50 and the 200-day moving average, which is, the indicator of a major new trend. I always say, look, you want to be buying stocks that are breaking above the moving average, selling them when they're below. But right now, Appia is giving a technical buy signal. What's incredibly important is the underlying theme, the uranium theme, is super hot. I looked at that chart, the uranium chart. I believe, again, this is my opinion, Tom. This is not, you're not paying me for this. I believe uranium is going to hit a high of, I'm going to give you a number. I told you 310. I'm going to be conservative. I'm going to say 308. I'm going to say uranium is going to go $308. And I'll tell you, no, there's actually, I'm not being cute. I think 308, 310, somewhere in that range. Why? Because you have this kind of, anytime you have those type of bubble charts, you always have a secondary top that goes even higher, and it's usually double. If anybody looks at the old Bitcoin charts, Bitcoin did exactly that. If you look at the Bitcoin chart, what was the original high? I think it was like 20,000. Then it went to 60. It basically doubled the old high when people thought it was crazy. And of course, uranium is not Bitcoin. Uranium is, there's a real use case for uranium. People need it for energy. And by the way, if you were bullish on Bitcoin, guess what? You need cheap energy to mine that Bitcoin, and that's uranium. But Tom, enough about my opinions. This brings us back to why is Appia Energy on the move? The stock, again, breaking out massive volume. Apparently, you're looking to get the Elliot Lake project back on track. This is your major project in Canada, your uranium project.
Yes, thanks for having me back, Jack. Thanks for the opportunity to talk
about the long introduction. I'm looking at 4 minutes.
A very long introduction, and actually very thankful of the price of the uranium, the forecast price, your forecast. Yes. I've heard prices over $200 a pound, but
have you heard anybody say? Have you heard anybody say? Anyway,
let me just say this. Yeah. We were on a 15-year high, basically. The price of the pound price for uranium basically has gone up to just over $80 a pound, and that's a 15-year-old high is breaking out. So there's no doubt there's a lot of demand. The world needs energy. And especially we need clean energy, and uranium is one of them. Generating energy with uranium is one of them. Just to let you know that China has announced that they're going to build another 110 nuclear reactors. I mean,
110. Okay.
yeah. So
And that's just China. That's just that. We haven't even started.
that's just China alone, right?
We haven't started with
And
India.
now there's also the small modular reactors that they're coming into or becoming into stream, uh, and that's sort of another trend where you have more smaller reactors, and it's cheaper to build build, and so that's another big trend. So the world would definitely need more uranium, and now in terms of rare earths, China controls the supply of rare earths. In terms of the uranium, Russia or the Eastern Bloc, they've got the majority of the supply too. So I think we're definite on some mega trends here, and one of them is uranium.
Tom, I'm sorry. I gave this like long-winded introduction, and I missed the key point. I'm sorry. I missed the main point, which is the Elliot Lake project that you have. The reason why the stock is on the move is you have explained to us the resource, because you have an N43-101, right? So there's a real legitimate resource there. I can bring up the press release which shows the data. I just want to, so we can look at this in on the screen. But what exactly? Okay, so you have this is the okay. So the resource. Explain to us. This was work done a while back.
Yeah.
What does this mean in English? How much uranium do you have in the ground?
Okay, let's start from the beginning. Elliot Lake is in Ontario, just a couple hours north of Toronto, and it's a mining town. Basically, the area it's an old mining district that about 7 mines produced over 300 million pounds of uranium. So and produce also some rare earths there. So like back in 2007, Appia staked. It picked up a lot of ground in that area because the mines shut down because of the uranium price came down. The economics weren't there at the time, but they didn't exhaust the uranium reserves, right? So Appia went out. I went out with and staked a lot of properties there, and we spent about $10 million at that time, $10 million. And we did some drilling to confirm the historic resource. Now, on the basis of the historic work that was done in our property of Elliot Lake, there were about 200 million pounds of uranium based on historic information, historic drilling. Now, this is not a compliant resource. This is not an I-43 resource, but we raised at that time it was still a private company, Appia, and we raised $10 million. And actually, that money were raised between $1 and $1.50 a share, basically at those days. And we did some drilling and some exploration work. And on the basis of that, we came up with a resource that in both inferred and indicated, we have about 55 million pounds of uranium, and also we've got about 180 million pounds of rare earths, and this is on one of our zone, the main zone, the Teasdale zone, is basically the extension of the old mines. So what we have here on a NI 43-101 resource estimate, we've got about 55 million pounds of uranium, as I said, both in inferred and indicated category, and we've got about 180 million pounds of rare earths.
Okay, so let's say the question that is interesting is so I'm looking at this as an investor, right? So I'm looking at Appia as really it's an option. It's an option without an expiration date on the price of uranium, right? It's a call on uranium. There's no expiration date on this here, right? So you have I might even call it a self-funding option because you have multiple catalysts. So it's not like you're going to be going out of business. I mean, I'm not saying anything could happen, but this is like it's an option, right? So let's say uranium goes to let's call $200 a pound, right? Not the 308 that I'm predicting. but it goes to $200 a pound, which is just over the old highs. And people are saying they can go there. There's a lot of people saying, yeah, $200. Yeah, that's kind of like there's legitimate. That's kind of the legitimate analysts out there are saying that. Let's say uranium goes to $200. What would be the value? I mean, what would be the value of your property? Because you're not gonna. I don't think you're not going into production. You're not a producer. But let's say to a strategic buyer, let's say a Cameco or somebody like that, how much would they be willing to pay for what you have? Because it is like, I understand it's like a lower grade property. The uranium is at a lower grade, but you have so much of it. So like there's a whole bunch of things to balance. But what would be the value?
Jack, it's a very difficult question to answer. It's in the future, and I don't know what they would pay, but all I can tell you is this: 55 million pounds of uranium at $200 a pound. It's basically $10 billion in situ, in place. If we go with the historical resource, which is roughly 200 million pounds that we're talking about, it's $40 billion. So it's 10 to $40 billion, and that's without
$40 billion. Is the historical resource. Again, this is not the compliant.
But the 4301 resource, or the resource, it's 55 million pounds at $200 a pound. It's $10 billion, $11 billion in situ, in place, right? In place, yeah. So obviously, nobody's going to pay that price. That would be big discounts. Now, keep in mind, this is a low grade uranium deposit, but based on the historical mining there, based on 7 mines produced for 40 years, over 300 million pounds of uranium, the extraction process is known. Like there's no unknowns there, right? Okay. The uranium can be recovered. 95% can be recovered of the uranium, basically. Okay, that's the recovery rate on the basis of some metallurgy work that we did a few years ago, and on the basis of the historical mining processing. Now, the main thing is, when the price goes up, basically this is viable. It could be very valuable project. Besides that, we have all the infrastructure in place. We're very close to a mining town. There is a uranium refinery. Cameco has a uranium refinery about 120 kilometers away from us. There is basically roads, there's power, there is even natural gas on site. And we're very close to a mining town, Sudbury, which is a world-class nickel producing and other. So we have a lot of supplies and all this. So in other words, everything is there. It's just a question of the price. And just for people to understand, it's like gold. Like a few years ago, if you talk to anybody about if you had a gold resource for less than a gram a ton, they would laugh at you. Like a gram a ton. It was dirt, right? But then those days, uranium, the gold prices were $300-400, and it didn't make sense. Now gold prices are close to $2,000, and obviously there are companies mining half a gram of gold, right? Economically. So it is all about price and but again, the main thing is there's no unknowns here. There was mining there. There is the processing is done. We know the processing. Everything is in place. So if you and everybody else and we are right, where the uranium price gets to $150, $200, over $100, I think this is potentially a viable and very valuable property, and this is why we're basically we're actually reassessing the situation. Like we have this property, we know we have the resource, we know the infrastructure is in place. If uranium prices are $50 or $40 a pound, it just doesn't make sense to do anything with it. But the uranium doesn't get bad. The resource is still there, and eventually, at some point, it would be worth Not only that, but also this is secure supply. Basically, we know that it's
It's in
there.
Canada. Canada so
It's
far,
Canada,
free
and
country so far, democratic country,
secure
theoretically.
supply. And at some point,
Right.
the security of supply would be more valuable than the price of uranium.
Mm. Right, because who has it? Right now, it's a lot of the uranium. Where is it? It's Russia has it. I think the
Kazakhstan has a lot of uranium.
Kazakhstan,
Obviously, Canada has uranium, and Australia,
yeah.
but the bulk of the number one producing country right now is Kazakhstan, basically.
Yeah.
And that's, as you know, it's under the control of the Russians.
Yeah. So it's interesting. Okay, so but my question is, okay, so let's say you have this 50 million pounds of uranium, right? How much would it cost to extract it? I don't know. Let's say, how much would it cost to extract that uranium? Ballpark.
Jack, we need to sort of get a PEA, like we did do some studies, because the numbers have changed. But there's the cost of production there, and depending where this resource is, it's cost of infrastructure. You have to build roads, you have to build a camp. For example, we don't have to build anything. There's a town. If you got to bring power in, if you don't have water, everything is basically there. So there's a lot of factors there.
If you had to guess, I mean, ballpark. I'm sure you've heard ballpark numbers based on what you have, based on as is. Again, this is not. We're not holding you accountable. This is just. I'm saying ballpark. This is not any type of official.
Again, for every pound of uranium we have, or like for every ton of material there's about 4 pounds of rare earths. So I mean, one can take off
you got the rare. The rare earths.
So that's together basically with the uranium. We've got 2 reefs. The upper reef that has more rare earths. The lower reef has uranium, and there's something in between there, basically, that also has both uranium and rare earths, but not as much. So, what we're saying is, I think over $100 uranium. This thing looks attractive. If you maybe over $80-$90, but I would say this is a long-term project, and you really have a long-term project, right?
Well, I'm saying let's say we're at $200 a pound. At $200 a pound, it's
listen. At $200 a pound, there's a lot of profit. There's a lot of juice left. Here. Okay, but again, I don't want to come out and say this is the numbers, because I mean I'm just going to take numbers.
No.
And I don't like to give out numbers like this.
No.
We've got there's a resource here. It's a large resource. It's in the right place, and with uranium price moving up, and it would be valuable. And I think at this point it's speculative. Like investors have to see us as a
They should.
Sorry, and in addition to that, we got 4 uranium properties in around the Athabasca Basin in Saskatchewan. So so we do have some other uranium projects.
Okay, so this is the thing that we like is this. There's multiple shots on goal here. I mean, this company is in all the right places right now. You got the rare earths projects. You have right here, in Elliot Lake. You have Saskatchewan. And then you also have in what do you call it
in Brazil? We have in Brazil, the project, the PCA
in Brazil, right.
So
which is coming along.
We think we're in the right. I mean, there's a major trend, Jack, the transition to clean energy, and besides, as you know, everybody's using a cell phone, computers. AI is coming in, so we need more power. We need more energy.
Yeah, speaking of AI, Tom, I'm glad you mentioned AI, because AI, we're like not even in the first inning, but it is going to be a major. It's going to be bigger than, like, now we have this cloud computing, like everything runs on the cloud, right? Like we're doing this live stream. This is all done like through the cloud. It's like probably Amazon or somebody is using, but these guys have these massive server farms that take up huge amounts of electricity. Now AI, for AI, it takes maybe like 100 times that electricity. Again, I'm not a scientist, but it's a by an order of magnitude how much demand for electricity there's going to be once you have AI really taking off, because that is going to be it's just going to be massive demand for energy. So look, Tom, I don't know what the reason is going to be for uranium to potentially hit 308. I don't know what the reasons are. I'm just saying what the chart looks like. I've seen. It's like what the chart basically tells you the future in advance, right? Like I don't know what the fundamentals are going to be. It's like I remember seeing like a crude oil chart. Back in the day, it was like crude oil was trading at $20. I said, man, this chart looks like a great. It's going to go to $40. I didn't know that Saddam Hussein was going to invade Iraq. I mean, invade Kuwait, whatever. This is one of my first my early days in the commodity business. And I was like telling these guys in my office, like I was like a 16-year-old kid. I was telling these guys, yeah, this crude oil is going to look. This chart is an amazing chart. It looks like it's going to go to $40. And I don't know why. I have no idea. But there it is. So we don't know why uranium can go to 308 or 310, but the chart is definitely saying that. Again, this is not a prediction. We're not saying anything about the price of Appia Energy. This is not a price representation.
Jack, in terms of the energy, like huge companies like Amazon and others, high tech companies, they have this data centers and they require huge energy. In other words, they have to have big energy supply. Otherwise, you can't really have a data center like this. Okay. Now the other thing is, I've heard rumors. I don't know how true those rumors are, that utilities in the U.S. they're looking for uranium, so they're trying to buy, let's say, 1 million pounds, and they only get fill on half of it. Mm-hmm. So there is some. So there could be some unbalanced supply here, right? That there's
in the short term also.
In the short term, and also in the long term. Like for quite a while, the uranium price was down.
We forgot.
Everybody shut down, right? There was no more exploration.
Tom, I think we forgot to add something here. I think so. So the problem is, or the opportunity is, so for these utilities, right? Let's say you're running a nuclear plant, right? Like the uranium, it doesn't really matter what price you're paying, because that's like that input cost is actually not your big cost, and they have to keep it running. They can't stop all of a sudden. They can't say, oh, the price is 300. We're gonna shut it off for a week. They can't do that.
No, they can't do that. And the price of uranium for a utility is very significant. I don't know if it's a few percentages of the total cost. The big money is building the reactor, and once you build the reactor, you have to load it, and that takes a few million pounds, I believe, a lot of uranium, and then you got to keep it going. If you can't shut it down, it's very difficult to shut it down. So you definitely need to have uranium to keep going, because
at any price. That's the thing. It's like
at any price. But again, the price doesn't matter too much. When the cost of electricity, the cost of that these guys are paying for the uranium is not that much. Even if the uranium doubles, it wouldn't affect them that much. But they got to have uranium to make it to keep going, right? They can like shutting down a reactor is a major task, and you don't want to do that. It's costly and all this.
Yeah. So no, it's not. Listen, everything is pointing. I mean, everything. It looks like the stars are really aligned for this thing to go to the moon, because, again, Kazakhstan, Russia, whatever. It's really the same thing when you talk about. Same group of guys controlling the thing. I think that there's somebody's probably gonna see this opportunity to squeeze the these, especially look if with Russia, their needs for capital right now, I think everybody's going to want to push uranium prices higher. I'm not sure what other drivers there are, but there's two things. There's one is the short term, that supply demand thing that we're talking about right now, and I think that's going to be the thing that's really going to push it. But over the next 5 years, what's going to underpin it, what's going to make this a sustainable boom, unlike last time, is that you really have this massive demand now, and you're going to have all these these plants coming online in the next over the next decade. So this is not going to be that. I don't think this is going to be that boom bust thing that we had in '07. This is going to be kind of a long-term trend. I'm not saying it's going to go to 1,000 a pound. Again, I don't know. I have no idea, but I think there's definitely a path. I think there's definitely a path to 308 and to hang around that range. I mean, it might come down, but it's I don't once it breaks out out of that, like 200, 300, yeah, it'll probably be bouncing around between 100 and 300 for a number of years.
Well, one thing is for sure, the world needs more clean energy. We have this global warming that we need to deal with. The world needs to deal with, and I think so. Uranium would be here to, and it will be in higher demand to get more clean energy to basically. So I think we're on the right trend. I don't know about squeezing or this or that, but I think the long term prospects are here. That's my opinion. Like they're good. The price is on the way up. It came up from the last 2 or 3 years from $20 to $80, over $80, and projections are a lot higher. I mean, so I think so going back to Appia, we think we've got a very exciting project, because it's not just potential. There's a resource there. The infrastructure is there, and should the price continue to go higher, the numbers will work basically, and I think that would reward the shareholders of Appia that have been waiting for the last 10-15 years.
Yeah, let's see if we have any questions. I don't know if we have any questions coming in here. No questions so far. So I'm gonna end with a comment here, Tom. Basically, the bottom line is this: you have potentially, we've been throwing around some huge numbers, and this is just one of your projects. Today, we're talking about this uranium project, Elliot Lake. Again, you have in the ground this resource of 50 million pounds. In theory, again, we're talking about a $200 number. This could be a $10 billion in situ number, right? 10 billion. Now, we're not saying it's that Appia is going to be worth 10 billion, but I don't know, what's that $10 billion? What's the net present value, the cost to pull it out? I don't know. Is somebody going to be willing to pay 500 million, a billion? I mean, they're going to pay whatever it is, 20 cents on 10, whatever the number is. It's not going to be, but still, 500 million or a billion is a lot of money, especially when you look at today's market cap, which is only, what is it, 25 million bucks or something?
Well, Jack, let's look at what we have today. We've got, let's say, 50 million pounds of uranium at $80. That's $4 billion in the ground. So basically, so there's this value, and most likely uranium prices are going higher. So this is going to be increasing. And as we said before, there's going to need for more supply of uranium. So then could be interest here for somebody to do something, either buy out or buy the project, or come in to develop the project, or do some JV or whatever scenario, and that would create some value for us, for Appia and its shareholders. But as I said, just on the basis of $80, 50 million pounds to in crude calculation it's $4 billion in situ valuation.
Yeah, I'm looking at this way. Like, I think as an investor, I would look at Appia as kind of like an an out of the money call on uranium, right? Without there's no expiration date on this, right? But it's a it's because it's kind of a lower grade, so you need a higher price for it to make sense. And whether it's 100, 120, whatever it is, but at $200, all of a sudden this could be worth. Again, I'm not a I'm not a geologist. I'm not a mining a guy who does the numbers, but I would think kind of I'm going to throw out a ballpark. I would think there's a 20x upside potential. Again, if it hits that crazy price, if uranium.
Well, I would agree with you that if he hits up for that price, then there's going to be a lot of upside here. But the most important fact is we've got this resource, and you put it right. It's the coal Appia's project. The uranium. It's a call on uranium and rare earth prices. Now you said it's way out of the money. It's not way out of the money. At $80 to $100, we're getting into the money. So,
but the upside is that because you have so much of it, so it's sort of like that's what you're getting these options cheap, because it's like, but you have these 50 million pounds. That makes that's a lot. So there's a lot of leverage. Basically, there's a lot of leverage, a lot of torque in this. Once we get into those kind of higher numbers, once uranium gets into those higher numbers, there's a lot of leverage. So we could see like this stock could see a significant pop. Like it could be like a moonshot.
Well, John, we're talking about 180 million pounds of rare earths and 55 million pounds of uranium. That's basically 235 million pounds. We've got about 130 million shares out. So basically, we have a couple of pounds of rare earths and uranium in the ground, and based on the historical resource that can go basically over a pound or a pound and a half in uranium if we continue with the exploration, and if we're right, and another pound and a half in rare earths. That number could increase. So it's definitely a call on uranium and rare earth prices, and the timing is important. I think the timing is here now. And don't forget, we've got two other projects. We got a high grade monazite rare earth project, the Elliot Lake in northern Saskatchewan, and we've got a ionic clay type rare earth project in Brazil that the investors will get a lot of news from the drilling, the work that we have announced and we'll be doing. So it's exciting. I think it's exciting times, and we think that shareholders will be will have a good chance to make some serious money, or there's potentially quite an serious upside here on this company. Mind you, we don't know the future, right? Nobody knows the future, and I always, as always, I advise anybody to take all this information and with grain of salt and do their homework. And we got a lot of information on our website, on CEDAR, I think they should also look for advice from their, professional advice from the investment advisor.
Excellent. Tom, I like the disclaimer at the end. We're not making it.
Listen, I mean, it's only fair, John. I really don't know what's going to happen 5 minutes from now. I can't tell you what's going to happen next year, right?
Exactly. So, I think it's obvious. Yeah, when we're saying these, it's like we're not saying that uranium is going. It was a potential. Look at the chart, but anything could happen. Look, we've seen. Everything is volatile. Excuse me. Okay,
John, I'm the biggest shareholder of Appia. I've got 32 million shares. So I mean, I'm a believer. So I mean, what else can I tell the investors, right?
Excellent. No, this is good. So bottom line is, things are looking very exciting. On a technical basis, the chart is very bullish. Again, the stock is above the 50 to 200-day moving average, which is usually an indication of a new uptrend starting. You want to be long stocks when they're in that position. Again, this is not a recommendation to buy or sell. Look, the uranium is again also on the move. breaking to new highs. So the stars are aligned. Anyway, Tom, thank you for the update. Thank you everybody for joining us, and we'll see you all on the next live stream.
Thanks, Jack. Really appreciate it. Thank you.